Even though Canadians are facing higher and higher costs for housing, federal agencies are sticking to their policies to protect the market. The Office of the Superintendent of Financial Institutions, or OSFI, is keeping its mortgage stress test in place.
In the situation that we're in today, it makes sense for Canada to continue with our tradition of being careful, being thoughtful, being prudent.
This comes as the Bank of Canada's interest rate is at its highest since 2008. Earlier this month, the bank raised its benchmark rate to 4.25%, in turn increasing Canada's big bank's prime lending rate to nearly 6.5%. Even though the stress test has faced criticism from those looking to enter the market, experts say it has worked as intended.
Fewer people are selling their homes, which suggests to us that even though we are, obviously there are individuals who are being very negatively affected and are being forced to sell, but it's not a widespread problem.
The stress test, which is seeing qualifying rates approach 8%, is being put into question as many wonder whether it's realistic.
For someone that's up for renewal, it really gives them not many options. It's less options for them to choose from when it comes to switching to a different lender for a lower mortgage rate, for example.
While borrowers have fewer options, questions remain about whether the government will ease measures from the test, with interest rates expected to peak in 2023.
I think it's a valid argument. But again, I think policymakers want to be on a very taking a very conservative position right now.
OSFI says it will review the stress test as well as other mortgage standards in January, but expects to leave everything in place once it's done. Kyle Benning, Global News.